Hey, welcome back. I just want to share a couple of exciting news. The first of which is the current surge on the Bitcoin price. It's currently hovering on the $72,000 per coin, and it's still going up. And secondly, there's the Nakamoto upgrade that's just been released, which has introduced some rather interesting features that I think the investors should be made aware of. So
as it says in the article, it surges above 71,000 as the crypto market is currently experiencing kind of a pump of 175 million in shorts being liquidated. I'll explain what this actually means. This has been triggered by a 5% increase over the past 24 hours, which has led to significant trading volume and the liquidation, as I said earlier on, just over 143 million in short positions. Now, there's a lot of reasons why this has been the case. As we all know, there's some upcoming US elections that is due to complete by next week. And also there is some apparent whale activity on Binance and substantial inflows that's been made into the Bitcoin ETF, which has saw a net increase of just under 50,000 Bitcoins the last 2 weeks. So what are the reasons behind this 143 million short positions? Well, just explain what short position is. They're more like bets that the price of Bitcoin in this case is going to fall, right? But when the market moves in the upward opposite direction, short sellers in this case are forced to actually close their positions to avoid further losses. Now, this process is called a short squeeze. And this is what is meant by this 143 million of short positions being liquidated in the market. Think of it as squeezing out the 143 million bets in the crypto market. And as a result of this, as more and more traders attempt to reopen new positions in order to capitalize the surge in price, it creates more demand, which then explains why we are seeing currently this significant price surge in a short space of time. If I just quickly show you the charts, we can see effectively this is a 15-minute time window on the chart here. You can see that we are currently just under the 73,000. We're actually at the point of where we were back in March early this year, where we struck the all-time high of $73,500 back in March 2024. And ever since then, we've been going sideways position, up and down, which is expected, right? As a leading digital asset, Bitcoin, it's volatile and it's just starting out. It's a 15-year-old asset. So it's expected to have this volatility. So we're coming back to its original all-time high of 73,000, and it wouldn't be a surprise at all next week, if not perhaps by the end of this week, we could actually return to that previous all-time high position of 73,000. But in any case, I just want to explain how dangerous it is to do what the traders are doing. They are professionals. I am not a professional, which is all the more reason why I currently have Bitcoin, but I use it as a store of value, not to be traded with, not to be speculated with. It's a long-term, minimum 10-year to 15-year holding position. We call it a hodl, right? Where Bitcoiners such as myself are holding it for the long term in order to generate that generational wealth ambition that I have for my future legacy needs and heirs, right? So please tread with caution. Now, if I go back to the actual inflows, right, ever since the 11th of October, we've seen this upward streak from 253 million of net new money into the US Bitcoin spot ETFs. And ever since then, we are seeing pretty much between 200, 300, 400, or even 500, or even close enough to 600 million daily net new inflow money into the US Bitcoin spot ETFs. So this is tremendous news. There's been one exception to that, October 22nd, where we saw a net negative outflow of almost 80 million. But all in all, it's almost 3 billion of net new money to date. So that's pretty much around 2 working weeks. And I'm sure it's got to do with the incoming US president election that I said earlier on is coming to a close next week, by which point I would expect to have reached and surpassed the previous all-time high of 73,000 per coin. And from there on to the end of this year, who knows, right? There's a lot of talks that we could even reach 6 figures, 100K. But depending on which candidate wins, one could actually spike an even high increase than if the other were to win. In either case, we shouldn't care about who's going to win. It's clearly a bipartisan debate around crypto and Bitcoin particularly. So whoever wins is going to be good news for us Bitcoin holders and investors. I cannot stress enough why it's so important more than ever before the price is going to be completely out of the reach of the millions of us who are wanting to invest in this type of leading digital asset, to allocate a small amount of disposable fiat currency into Bitcoin and keep it, as I said before, as a long-term holding rather than being a speculative asset which professional traders do for a living, not in the case of us investors who see the long term. And finally, I just want to move on to this interesting other news I mentioned earlier on to do with this long-awaited Nakamoto upgrade. Now, this is very interesting because it actually introduced some long-awaited feature. Now, this Nakamoto upgrade is a layer 2 on top of the Bitcoin base layer, where this Nakamoto upgrade is meant to be doing. In one of my earlier videos, I give an explanation about the Bitcoin layer model. It consists of 3 layers. We have the base layer, which is the actual Bitcoin network itself. We have then the layer 2, which sits on top of the layer 1, and the layer 2 are like protocol solutions, scaling solutions, whereby they make numerous improvements, functional feature improvements on the base layer, such as lowering the transaction fees or increasing the transaction speed processing, which is the case of this Nakamoto upgrade, in fact. But in addition to these 2 features, it also has introduced the stacks. Now, stacks is like the Bitcoin smart contracts capability. It's trying to compete with Ethereum and Solana, which are the 2 leading smart contract technological blockchains in the industry at the moment. So it's very good news that Bitcoin are woken up to the fact that they need to make their Bitcoin ecosystem, network ecosystem, programmable in nature, which is the case with Ethereum, as I said, and Solana, which have already introduced these smart contract capabilities in order to promote things like digitizing physical assets like real estate property or even arts and collectibles, tokenized treasury bills, onto the blockchain in order to enable any kind of investor to have fractional ownership holdings of these various type of digitized assets on the blockchain. So clearly this Nakamoto upgrade is very important, long awaited, as it says here in the article, to introduce these 2 features, as I mentioned earlier on, plus this stacks smart contracts capability in the Bitcoin ecosystem, because clearly the real world assets, which is the next wave of the blockchain technology in terms of adopting blockchain for the mainstream, is clearly a multi-billion, if not a multi-trillion dollar addressable market opportunity. So clearly Bitcoin has done the right thing to enable this Nakamoto upgrade in the Bitcoin layer 2. So that's all I wanted to share with you today. Hopefully you found it interesting. As I said earlier on, do not get distracted by the imminent ups and downs of the Bitcoin price, particularly where we're involved in these kind of macro events like the US president elections, the sell-offs by the traders. We need to hold the Bitcoin holdings for the long term. Please, I insist, it's a long-term asset for generational wealth purposes as a store of value more than anything else. If you enjoyed today's video, please don't forget to like, subscribe, and even share this video if you haven't already done so already. So until next time.